American house prices have risen by 6.5% over the past year, Australian prices by 5%, and Portuguese prices have also surged. Despite high interest rates, these markets are showing strength. Conversely, in Canada, Germany, and New Zealand, prices have dropped by 20% when adjusted for inflation. British citizens are struggling with housing costs, with 41% reporting difficulty in making rent or mortgage payments, up from 24% in early 2022. Since 2021, the rate on a typical 30-year mortgage in America has increased by about 4 percentage points. Despite predictions of a 30 to 50% fall in nominal house prices, they have remained relatively stable, with global house prices down by only 6% from their peak in real terms, aligning with pre-pandemic trends. Concerns about a potential housing market crash persist, with many Florida listings indicating urgency among sellers. However, the delinquency rate for American mortgages is at an all-time low of 1.7%, compared to over 11% during the 2007 to 2009 financial crisis. In New Zealand, mortgage arrears are consistent with pre-COVID levels, and the Eurozone, excluding Germany, is experiencing less distress. The resilience of the American housing market is often attributed to its reliance on long-term fixed-rate mortgages, which have become more common in other countries as well. These mortgages protect homeowners from rising rates, reducing the likelihood of forced sales that could depress house prices. Additionally, they discourage homeowners from moving, as obtaining a new mortgage might involve higher rates. Despite a decline from pandemic highs, new mortgage applications remain robust globally. According to the National Association of Realtors, only 8% of people cited getting a mortgage as one of the most challenging steps in the home buying process, a slight increase from 7% in 2021. Three additional factors are driving the resurgence in house prices: immigration, mortgage holder sacrifices, and economic strength. The foreign-born population in the rich world is recently growing by about 4% annually, a record pace. This influx is pushing up both house prices and rents as new arrivals seek housing. Goldman Sachs estimates that Australia's annualized net migration rate of 500,000 people could increase house prices by around 5%. To cope with higher mortgage costs, many are cutting back on other expenditures. A recent survey found that 1 in 5 variable-rate mortgage holders in Britain are making significant reductions in household spending. Some households are using accumulated savings to service debt, as noted by the Norwegian Central Bank. Longer mortgage terms are also helping to spread out repayments. The Canadian government has extended the payback period on some state-backed loans from 25 to 30 years. In New Zealand, 6.4% of mortgages originated last year will last over 3 decades, up from 2.3% in 2020. In Britain, 40% of new mortgages now have terms that extend past the borrower's retirement age. Economic factors play a crucial role in the housing market's resilience. While interest payments have increased, so has interest income on savings, particularly in the EU, where it has risen nearly tenfold since 2020. Unlike the 2007 to 2009 crash, the labor market remains strong, with average wages in the rich world up by about 15% since 2021 and unemployment near historic lows. The increase in household labor income outstrips the rise in interest costs, enabling most people to manage higher mortgage payments. Central banks are beginning to cut interest rates as inflation declines, and America's Federal Reserve is expected to follow suit. Wage growth remains solid, and falling inflation will ease mortgage burdens. The constrained housing supply will meet rising demand, likely leading to further increases in house prices.